Hey everyone, quick update for the week ending Thursday, April 17th. Of course, the market's closed tomorrow for Good Friday, so enjoy your long weekend. Let's take a quick look at the markets, and then I'll go over my trades for the week. Looking at the S&P, I mean, just looking at a daily chart, I mean, the visual kind of tells it all, right? Like, look at the size of these bars for the last couple weeks, and then look at the size of these bars for this week. You know, we did have a decent sized gap down yesterday on Wednesday, but overall, I mean, compared to the range we've seen here recently, these ranges were pretty minimal. Couple things. One, you know, I mean, that's how the market works, right? It implied volatility expands. You have these huge ranges, and then it contracts, kind of settles back in. Not to mention a 4-day week. A holiday week, you typically see a little bit lower volume and less trading as well. So those things combined gave us a little bit of a, I don't want to call it normal week, but certainly not what we've really been up to the last few weeks before that. Pretty similar action in the NASDAQ. The Russell has been a little bit more sideways and actually a little bit more compressed. The Dow has been the weakest. Part of that today was United Healthcare down about 23% after earnings. Pressed the Dow down. Ended the day down 1.26, where all the other indices were green by a little bit. Russell was actually up a full percent. Gold continued to hit new all-time highs. Hit it again today. End of the day red, but 3371.9 an ounce in gold. Pretty amazing. Silver, big bounce back. Hasn't quite gotten up to its March 28th high, but pretty big bounce back here the last couple weeks. Notes and bonds, a little bit down today, but bouncing off of the recent collapse that they've seen, with the 10-year yield settling in at 4.332. Little bounce today after a sell-off this week. Oil up 3%, little bounce off of the sell-off that it's seen 2 weeks ago. Natty gas pretty sideways on the week. And then the grains, which have been moving as well. Soybeans pretty sideways this week after a big up move last week. Wheat kind of back and forth. Corn pretty sideways. And then as far as the currencies go, euro pretty sideways, and the pound continuing to push higher versus the U.S. dollar. And then Bitcoin ending a little over 85,000, pretty tight range, kind of choppy back and forth. And the VIX ending under 30. Just a short week and a half or so ago, we're above 60. Now we are below 30. So some decent contraction from those volatility highs. All right, so as far as my trades go, I've been talking a lot about this. I did a podcast episode on adapting your trading to the environment, and this week is a really good example. I've been really the performance of my trading has been carried by directional day trading, because there's so much volatility that is, in my opinion, the best time to trade directionally. This week, we saw some really nice volatility contraction, and so my best strategy by far was selling 0 DTE premium. Here is, let's see, this is this week here. So you can see Monday, this is basically what I call price action iron condors, basically just looking for pockets of consolidation and selling 0 DTE premium. So I had on Monday I had 2 losers. On Tuesday I had 0 losers. Wednesday I only traded 3 times, had 1 loser, 2 winners. And then today I had one loser. So for a total of 14,702 on 0 DTE price action iron condors. My British iron condors, I traded Tuesday, Wednesday, and Thursday. Frankly, Wednesday should have been a scratch day, or at least a smaller loser. I completely forgot to close those prior to JP speaking as I intended to, but still came out green, a little over 3,000 on the on those 3 days for my British Iron Condors. No Woogas. Mahomes did 3 trades, 2 winners, 1 loser, plus 300. And then day trades were the only other thing that I traded and came out a little red on day trades, minus 1,787. So my total for the week, plus 16,240. The other thing, and I've mentioned this a couple times on the live streams, is, when we're in an environment where we've had massive expansion and volatility, and now if you're trying to buy puts or buy calls to catch directional moves, like I showed you, we had that massive contraction in range. And on top of that, the pricing of these options is still very high because of the uncertainty that's going on. And so you have to have a pretty significant move for a long put or a long call to profit, right? So just keep that in mind when you're in these different environments. The best time to be selling premium is after you've seen a big volatility expansion and then things start to calm down, right? The price of the options are still elevated, but the range of the price moves significantly drops. And then from a directional standpoint, if you're buying premium, if you're buying puts, buying calls, it will work against you, right? Because those option prices are still elevated. So you have to have a bigger move to profit. But not only are the options prices elevated, but your range has shrunk down. So it's just really reflective in what we're seeing this week, where my directional day trades are red, where I've had some really good success in those when volatility was expanding or when we were having those outsized moves, and then the premium selling in this environment has really shined because of the tightened range, but still nice and elevated premium. So just a little anecdotal FYI as it's happened. So hopefully that helps in kind of helping you, think about things that way when you're in these different environments. I've talked a lot about you have to adapt your trading to the environment that we're in, and this is a good example of doing so. That's all I got. Have a great long weekend. Enjoy your day off tomorrow from the markets. Recharge, refresh, get ready. We'll be back at it Monday. Take care. Have a good one.